Good morning, traders. It is Tuesday, September the 10th. Taking a look at the charts today, really not a whole lot has changed over the last few sessions. Really, we've been waiting and seeing which way the stock market was going to break out of this range. It broke to the upside. It's consolidating. It is tagging the 5-day moving average, this blue line here to the upside. If this is a high momentum move, and if we have a consolidation at this 618, usually we see the second half of that move, the rest of it tagged, which puts us right into the 100% measured move, previous pivot high. So we'll see if we get some traction and see the market continue to pop and move higher. Overall, the way the market moved is it actually gapped open way up here. So anyone trading an ETF, this was a huge gap that will get filled eventually. And if I actually show you the SPY ETF, you can see it a little clearer. This is the gap in price that the market had. In short, the market loves to try to move in a way that it's hard to catch the move and it puts you at a high risk. So the market, we are anticipating a breakout. We'd like to get long, but the market had a huge move up to the upside, ended up closing up like 2% that day. Huge gap to be filled. And the upside target is really kind of just up here. It's not a whole lot higher, meaning most of the move is done. At any point, the market could have a huge reversal and sell down to fill the gap window, potentially go even deeper. So we didn't really want to get into a position there. Now, overall, the market continues to hold up there. But if we take a look over at the Russell 2000, we'll go to the futures here. Russell 2000 yesterday actually had a nice pattern that I liked. It's got these declining highs starting to break out. Still hasn't broken this previous high, which means when it does, we should see some short selling, or sorry, short squeeze, meaning everyone who's short, that'll be the final straw. They're going to have to cover their shorts, which means they're buying back shares, which is going to drive price higher, and it'll be a breakout. So any breakout buyers will start to pile in as well. So we could see a very strong green up bar if this starts to break out. Now, overall, yesterday, the Russell 2000 was trading close to the 5-day moving average. It had rallied up and flagged down in a nice intraday, multi-day intraday bull flag here. So you've got your rally up, you've got your pullback, and you got the second half of that move. And that's what we're looking for. Yesterday it ended up closing fairly strong on the session, and we're hoping it's going to continue to see this breakout. So we see the major indexes run up to their upward targets. SP 500 moves higher. Russell 2000 allows us to get in with lower risk than the SP 500, and I like the setup better. So hopefully we'll get a pop and a breakout here for us to start hitting some targets with the equities market, since it's showing signs of bullishness in the short-term basis. Now, if we take a look over at the safe havens, let's pull up the chart of bonds. Obviously, if money is rotating into stocks, it's got to come from somewhere, and it comes out of the safe havens, which is the risk off assets, and it goes into the risk on. So money's coming out of bonds, the risk off. Same with metals, it's coming out of metals as well, and is going into stocks. And so we're seeing bonds continue to sell off. Started to break this previous low there yesterday. It's picking up some speed. Overall, we're seeing like a drop, a bear flag, a drop, a bear flag, a drop, a bear flag. Now it just looks like a one-day pause, but if you're looking on an intraday chart, these are nice bear flags forming, and bear flags are continuation patterns, meaning it'll flag out, and then you see another flagpole take place. So hopefully we'll see this continue to unwind more. I do like bonds going forward because I think we are getting close to the end of a bull market. Eventually bonds should hold up and do fairly well for a while anyway. So we're looking for new entry points in these sectors as the market tries to figure out which way it's going and how far it's going to stretch in either direction. If we take a look over at gold as a safe haven, same type of thing. It's selling off. We got out right up near the highs with most of our position, or half of the position that we had, and then stopped out at break even for the balance. As price is starting to reverse, this could continue to move lower. I do feel out of all the safe havens, gold and bonds should hold up. Those two, the better than miners and silver. Overall, still under pressure. It's kind of picking up speed here. It looks like we could see it continue to sell off, but we'll be looking to get back into metals because eventually we're going to see metals, I think, take off and continue to go higher. Silver, same type of play. We saw this explosive move. It popped through resistance, held for 2 days or 3 days, and started to come back down. Overall, it came down and tagged the 20-day moving average, which is going to act as a support zone for a bounce. We are starting to see a little bounce in metals this morning, but overall, we could see metals trade sideways in a large bull flag. Maybe they're going to have a bounce and a three-wave correction. We'll just have to see how things play out going forward here. But overall, money is going into stocks out of the safe havens currently. Let's take a look over at utilities. I haven't looked at them in a bit. So they ended up having a kind of a blow off top here, a big pop, and then it's fizzled back down. Obviously, utilities are seen as a safe haven as well. No matter what kind of recession we are in, people still need running water and hydro and those things, or electricity. So overall, people move into utilities as a safe haven while the stock market is showing signs of weakness. Let's take a look over at Let's take a look at the miners real quick. GDXJ starting to break down yesterday. We talked about that head and shoulders formation. We've got this, whoops, wrong tool. We've got this neckline across here. The neckline is broken. We could start to see it pick up speed. The distance from the neck to the top of the head is usually the potential breakdown pattern. So you could take that same distance. We could see it run and flush down into the 35 mark. On the chart, potentially it's picking up speed. We got increased volume, and we saw the gold miners bullish percent index like hitting 100%. I might do an article on it, talk about it, but overall, whenever 100% of gold miners or 95% of them are in bullish patterns, that means it's a sector that's overdone. Everyone's in it, everyone's already bought, and all they're doing is buying more. But when the music stops, we're going to see them flush out and move down. So we're starting to see that breakdown. Going to get a cleanse of this market. I know there's a ton of you that love gold stocks and want to be long them, and you don't like it when I say sell our gold, get out of our silver stocks. But overall, we're here to trade and make money, not to fall in love with positions. And I love gold, I love silver, I love miners, but I'm trading them for money, not just to hold on to them because I love them. I think we can get back in at a lower price, and I don't need to hold positions when it's going down or sideways. We can keep our money safer just in cash without any risk, and then get back in later at a later date. Let's take a quick look at the energy sector. Here is natural gas. Natural gas, we got in over here, caught this beautiful run right up into resistance, and it acted as resistance only for a day. We got a really nice gain, about 9.88% gain on that. We did close the trade out. It's starting to go really parabolic. It's starting to break out through this significant resistance area, and it is now up to this previous pivot high. So we'll see where it goes. Overall, I do like natural gas. This is a nice strong momentum play. We are looking for some type of pause or pullback to get back long. We do think going forward, seasonality wise, we could see this really take off. Hopefully we get an opportunity to get back in, but either way, we did catch a perfect move, and now it's overextended. It's just continuing beyond there, and you never know when it's going to reverse that resistance or take off. And if you hold on to things, eventually they end up going back down to your entry point or below. So if you don't take profits, you definitely will usually catch up to you in the end. So overall, I know we're missing a nice final pop here, but who knows how this is going to end. Usually what gaps higher and starts to go straight up through resistance in areas, we can see very sharp reversals back down, just like we saw in silver. So just be aware, the key is finding a trade, playing the logical safe area, getting in, getting out, looking for a fresh setup that has low risk again. It's not about if something has a big move, it doesn't mean necessarily you should have and you need to take advantage of it. This type of stuff is extra risk, it's increased risk. You could keep a runner in there, but overall these usually end very abruptly and quickly, and in one day you could see 2 or 3 of these green bars wiped out and we'd be right back to where we got out originally. So that's kind of how that typically plays out. Looking over at crude oil, up 1.1% this morning. Yesterday it broke out of this range and closed up nice and strong. Today it's picking up speed again. Overall, I've talked about this every day more or less. I don't like this pattern. It looks like it's built a base. It's starting to pick up speed, but it's got lots of wicks. It's huge rotation here. It's got resistance that is coming into there again. There's going to be resistance right through here, more resistance through here. And overall, I just don't like the chart. Crude, I feel like it's very much so a gambling play at this point still. Really, that's about it for this morning, and I'll talk to you in a little bit. Bye bye.